Hey TMFG community, Carlo Cantino here with John Iaconetti. And in today's Ask TMFG episode, we'll be discussing the recent changes that the government's made for first-time home ownership. Again, if you do like our content, please do subscribe to our YouTube channel, provide us with a comment, or give us a like. In today's episode, we'll be discussing the recent changes to first-time home ownership. The government is trying to promote first-time home buyers getting into the market, and they're trying to make the changes to make it a little more feasible for them. So, John, why don't you get us started?
Perfect. Thank you, Carlo. So just like you mentioned, this is a relatively recent change that's been presented within Canada, looking to promote first-time home buyers or help them be able to get into the market. And we saw two changes occur. The first one was allowing first-time home buyers, specifically for new builds, be able to have a 30-year amortization on their mortgage. And then the second is for first-time home buyers that you're currently allowed to withdraw money from your RRSP in order to put towards a first home purchase. Originally, they allowed you to take up to $35,000 out of your RRSP. Now they've upped that amount to $60,000. So today, what we're going to be going through is what are some of the pros and some of the cons of these necessary changes, and how really they can impact you if you are looking to do your own first home purchase. And I'll get things started when it comes to the 30-year amortization first. And we'll start thinking about why would the government want to do this? What are some of the pros that it could be for first-time home buyers? And really it's in regards to making it a bit more affordable in terms of those regular monthly payments. So if you think about a regular mortgage, or I guess a regular amortization, usually be about 25 years, now extending that out to a 30-year amortization, that's going to bring down your monthly payments. But now you're extending the amount of time that you're expecting to be paying that mortgage. So that's one of the pros in being able to get a little bit more affordability and hopefully be able to open the doors for a lot more Canadians to actually enter into the market as a whole. Now, overall, that is the pro that they're trying to get people to do and be able to get into the market. But what are some of the cons that first-time home buyers should be thinking about in regards to a 30-year amortization?
Thanks, John. Obviously, implementing these changes, there are some benefits that are involved, but there are some disadvantages. And number one, when you take a loan over a longer period of time, those interest costs are going to increase. You're paying it out over a longer term, therefore the bank or the financial institution is going to earn more interest over that longer term. So you end up paying far more than you would had you taken the amortization over a shorter period of time. Number two, there could be a risk of over-leveraging or over-borrowing. Given that now you can stretch a mortgage over a longer period of time, your payments could be more affordable, but that's still taking on additional debt. Changes in interest rates could increase those payments and put you into a situation where your cash flow might not allow for this additional debt.
Yeah, that's an excellent point there, Carlo. We ran the numbers specifically in regards to how much more interest are you expecting to be paying on a 25-year amortization as opposed to a 30-year. And while you are getting the monthly costs or additional help for affordability, you're paying a lot more in interest over that period of time. So let's think in an example of a $1 million mortgage at a 5% interest rate over 25 years. You're probably paying about $1.7 million over the course of the duration of that mortgage. Now, if we just extended that out to a 30-year amortization, the total payments over the course of that 30 years is closer to about $1.9 million. So pretty substantial. It's actually close to about $175,000 more of interest that you'd be paying over those additional 5 years. Now, that's absolutely huge. The amount that you're really saving in terms of those monthly payments is probably only adjusted by about $500 per month, but the total interest you're paying is substantial. Now, that's why for some Canadians, this might not be the best situation. You might be attracted to the idea of lower monthly payments now, but that's going to set you back really in the long run.
No, that's a great point to make. Although it is affordable to get into the housing market, you are essentially paying an additional $200,000 for that same house for the benefit of taking a longer time to pay off that mortgage. So thanks for pointing that out, John. Number three, the third con of extending amortizations to 30 years is you're contributing to the problem that we already face in Canada, and that's rising house prices. By allowing more buyers to be in the market because you're making payments more affordable by stretching out that amortization, you're just keeping more buyers, higher demand, prices won't have the ability to come down. We know what the Bank of Canada has been doing. They've been increasing rates to try to minimize the amount of demand out there on houses, to try to bring down housing prices to allow people to get in. By making mortgages more affordable, by increasing the amortization, you're keeping the amount of demand in the market. So those are the pros and cons of the government changing the rules for first-time home buyers by extending amortizations. What they're also doing is allowing you to withdraw more from your RSPs under the Homebuyers plan from $35,000 per annuitant to $60,000. This allows Canadians to increase the amount that they can put towards a down payment by allowing you to draw more from your RSPs. Benefits are the same. You're taking it out and taking a 15-year window to pay it back into your RSP to avoid any tax implication. By making these changes, you have the flexibility to take more out of your RSPs to reduce your mortgage amount, or if rates have dropped and you can borrow more from the financial institution, then you may want to do so and keep more money in your RSPs if you think the rate of return is going to be more than what the borrowing rate is.
Absolutely, and just like with the housing amortization change, there's going to be pros and cons as well to how much you could take out of your RSP. And if we think more on the negative side, I'll take more of the negative approach on this one. When we get into starting to think about retirement planning, if we're already taking on that 30-year amortization, you're already having to put in an extra $175,000, and now you're taking already from your RSPs. Now we know RSPs are at its most benefit when you have time to have that money continue to grow. If we're taking it away now, and you'll slowly start putting money back in, but it's really going to greatly impact the overall growth in the RSPs and setting you up for your retirement. And on top of that, if you do the 30-year amortization, just more money going to your overall mortgage as well. So this ends up becoming a little bit of a band-aid solution to help Canadians get into the market as a whole, but could be impacting Canadians' overall financial status down the line, as well, potentially their retirement. We know getting into retirement is going to become more and more difficult for a lot of Canadians. That's why they are increasing the CPP benefit, or of how much people can contribute to. The government already knows this is a problem that we're facing. Taking RSPs from young Canadians now to get into the housing market might be solving one issue to create another.
Exactly.
So there's a lot to be said here for what the government is doing currently. Is it a be-all and end-all solution? I guess time will tell. Early signs don't point to that. It could be a great way to get Canadians into the market as a whole. But like we said, there's a lot of cons that could be here in pursuing the 30-year amortization for young Canadians, as well as taking more money out of your RSPs in order to get into the housing market. So let us know down in the comment section below what you think about the government's plans to make these adjustments to housing affordability for first-time home buyers. As always, we'll continue to stay on top of current market trends and provide you videos for it. So as always, if you did enjoy this video, like, comment, and subscribe to our YouTube channel. But until next time, I'm John Iaconetti.
I'm Carlo Cancino.
And this has been
Ask TMFG.